Hello, it's ChewDog Charts, and as of today, I have 13 subscribers, and I'm going to call them the Lucky 13. And perhaps each and every one of you has asked the question, is the stock market investing or is it gambling? Well, for me, it's investing. For some, it's gambling, but it's only gambling if you're just throwing out your money and you don't know what you're doing. So today, what we're going to talk about is playing the odds, but stacking the odds in your favor. And both stock investors and gamblers look for an edge in order to help enhance their performance. For good gamblers and great stock investors, they study the behavior in some form or another. Gamblers playing poker typically look for cues from the other players at the table, and great poker players can remember what their opponents wagered maybe as much as 20 hands back. They also study the mannerisms and betting patterns of their opponents with the hope of gaining some kind of useful information. This information may be just enough to help that player predict future behavior. Similarly, stock traders often study patterns by interpreting the stock charts. Stock market technicians try to leverage the charts to glean where the stock is going in the future. So today, I'm going to show you one of my favorite patterns that's going to help stack the odds in your favor. So let's take a look. Today we're going to talk about a very common pattern. Some call it the double bottom, others call it a W pattern. And this chart here is relatively useful because it has multiple patterns. First, the longer term pattern, which starts here, moves down to the first bottom, the bounce back to the midpoint, and then back down for the second bottom, and then up and away. And within this are two smaller W patterns. Down, up to the midpoint, down, and up. And then again, down, up to the midpoint, and then down and up. Now, this line here is the double bottom. That's the line that you want to take a look at for when the price declines and bounces off. And then here, this red line is the breakout point. So if you're playing the larger pattern, you typically wait for the stock to get to this point here, which is equidistant to the midpoint, and then you wait for the breakout, and that's when you put your money in. Now the same thing here on the smaller pattern. You wait for the rise and then the rise above that midpoint, and you put your money in. Now, there are many different interpretations of this pattern with regard to the amount of volume and actually at what point you want the double bottom to be in. Investors Business Daily likes to have the second bottom at a lower point. And then these guys here, they simply have it at the same point. For me, I'm not going to get too critical about it. My pattern is slightly different. Now, you can play these patterns on a longer term, and this one is like a monthly, but as you can see here, you can play it on a shorter term, which is a weekly, even a daily, and even intraday down to, say, 15, 30-minute, or even a 60-minute time frame. It doesn't really matter. But for me, I like the long term. The reason I like the long term, monthly, let's say, is that once you do have a stock that has hit that second bottom and it's on its way up, then you have a long time and you don't have to hurry your purchase or your sale. And in fact, you might even be able to go in and out of that stock during its uptrend. So now let's go take a look at my charts. And this chart here is Enbridge Energy Partners. It's the 20-year monthly chart, and the symbol is EEP. And we did take a look at this stock a few weeks ago in one of my earlier videos, and I may have mentioned at that time that the pattern was one of my favorite patterns. But here we go, the W pattern. You start here, move down the first bottom, up to the midpoint, and then back down to the second bottom, and then hopefully we're going to consolidate and then head up here. So this would be the midpoint if you're a traditional chartist. For me, I don't necessarily use this midpoint here as the buy-in. If I'm convinced that this thing has hit a double bottom and the fundamentals are good, I might even get in much lower here. But let's go ahead and take a look at the stock here with regard to the MACD. And this kind of shows you also somewhat of a W pattern, but there's going to be variations of that. But then again, obviously down here, first bottom up to the midpoint, and then down here. Now, what I like to see here, which is more important to me than actually the price chart, is I like to see this second bottom at a slightly higher level than the initial bottom. You'll see that here as well in the MACD histogram. This level here is higher than this level. And that will repeat in some of these other oscillators, such as the momentum indicator. Here, it's at a higher point as well. Price rate of change, it's at a higher point. And then relative strength, slightly higher. Not necessarily a huge difference there. And then here in the stochastic, it's at about the same point. Now, you're not going to get the correlation in each and every oscillator all of the time, but I like to just stack those odds in my favor. And again here, the Williams actually shows that this is at a lower point. But for me, the MACD, that's my primary oscillator. So I take a look at that, and this shows a slight uptrend, gives me the confidence that this thing has hit bottom. Now, psychologically, what's happening here is you have your first sell-off and you have your initial sellers. Now, some of them still hang in here for the rebound, but at this point, they start to get a little scared because maybe their buy point was up in this level here, and they see that it's having some trouble getting back to that initial point here, and so they hesitate and then they sell out, and this shakes out the second decline here, shakes out most of those remaining sellers. So by the time you get down here, most of your sellers are gone. And then you start to have the buyers come in, and they call those the stronger hands, and the stock gets into those stronger hands, and then they hold it because they don't have any losses. So they hold it, and off you go. So let's take a look at another chart. All right, the chart that we have here is NewStar Energy LP, and the symbol is NS. And this chart and then the next chart are two stocks that one of the subscribers asked me to take a look at. And I'm just going to simply look at the charts with regard to NewStar and then the next one coming up. And I'm going to leave the fundamental analysis up to each and every one of you. But again, NewStar here. We start at this point. We come on down. You have your first bottom. Head back up. Here's the midpoint. And then back down here. And then we're just starting, it looks like, the upward trend from that second bottom. And this bottom here is slightly higher. But again, it doesn't really make too much of a difference to me. Moving down. And as you can see, this is a slightly different MACD pattern than EEP. But here we have it. We have your top. We have the first decline up to the midpoint, and then down to your second decline, and hopefully a consolidation here, and then the move up. And here you see the histogram. As I said before, I'd like to see a slightly higher second bottom than the initial. Down into the momentum indicator. This is slightly higher than this bottom here, but it still qualifies in my mind, as well as the price rate of change. Same sort of thing here, just slightly higher. And moving on down into the relative strength, as we saw before, you don't always get every oscillator showing you the same thing. This one has a slightly lower level. It's not too much of a concern to me. Again, the stochastics, again, slightly lower, not a real big deal. And through the volume down to the Williams, and the Williams more or less the same here and here. Moving back up into the price chart, you can definitely see that W pattern here. And you'll see another one. It's kind of a rough W pattern here, and then up, and then down, and then up and away. So in each stock, oftentimes you'll see this pattern show up in many different situations and also in many different time frames. And this again is the monthly, which I like to use. So let's go look at the next chart. And this chart here, which is New Star GP Holdings, and the symbol is NSH. And as we take a look at this, we can see the same or similar W pattern with the first decline, bottom, moving up into the midpoint, and then down into the second bottom. We'll move quickly through this because much of this is the same, but the MACD, here's your bottom, and then your next bottom is slightly higher, and as well in the histogram, of course. And then moving into the momentum, you see that the momentum indicator has a slightly higher second bottom. Here, the same, price rate of change, a higher second bottom, relative strength, that's about the same. And in your stochastic, that is also about the same, moving through the volume into the Williams. And the second bottom on the Williams is slightly lower, but again, not a real big concern. Just stack those oscillators in your favor. Now, a couple of things. First of all, disclosure, I do not hold any of these stocks, either long or short. And another disclosure, I can't guarantee any of this. Each and every one of you has to continue your own study, both technical but as well fundamental. And then lastly, when we have a downtrend such as we had on Friday, and if we do start heading into either a consolidation, maybe to a bear market, and certainly into a crash, although these stocks that have a lot of shakeout of the weak holders, and this has had, say, a double bottom with a double shakeout, this stock and other stocks may still react negatively in a very strong downtrend when the entire market is selling off. When that tide goes out, then everybody feels the effect of that. So, although these may be a little bit better protected since they've already gone through a shakeout, it's not going to be total protection. So keep that in mind. And in a typical market, looking at these patterns here like this, that's really going to stack those odds in your favor, and that's when you can really make some money. So for today, that's ChewDog Charts. Thank you.